Welcome back to Bazaar Morning Call. Well, we wake up this morning with very strong cues. So let's put some of them on board, right? The global markets have been very strong. The Dow, in fact, ended up almost 370 points higher yesterday. It's been the 7th straight day of gains and the longest winning streak since 2021. What's also happened in the US markets is that the earnings are off to a good start rather, the Q2 earnings. So out of 38 companies of the S&P 500 that have already reported results, 82% have exceeded expectations. So that is aiding the market sentiment over there. In fact, Microsoft shares rallied to an all-time high overnight after the company announced pricing for its new AI subscription service. So there's lots that's been happening in the technology space as well. A couple of other things. FIIs bought over 2,100 crores in the cash markets yesterday. And now in July so far, FIIs have pumped in 15,000 crores. So let's get Deven Choksey of KRChoksey Securities into the conversation to tell us how he's feeling about individual stocks. Deven, hi, good morning. What do you do with IndusInd Bank now? Very good set of numbers, net interest margins at an 8-year high. Is it still worth buying at this price?
Hi, Sonia. Good morning. Well, certainly, yes. I believe that I think most of these banks who have had the problem in the past regarding, I think, their books, regarding, I think, whatever the corrective actions had to be taken, including on strengthening of the capital, all those issues have been settled, I believe, and I think particularly for IndusInd Bank. Going forward, I think the bank probably should be seen from the point of view of increasing the loan rate, the growth rate in the loan rather. I think that is more important from here onwards. At the same time, I think the newer verticals that they want to create through the acquisition of RCAP, I believe that I think this is going to be relatively, I think, a better opportunity for them. In the commercial vehicle vertical particularly, I think the company is, I think, having relatively better time because we see the visibility of next 3 to 5 years, both for the fresh new vehicles as well as I think from the pre-used vehicles. In both areas, I probably see the companies having relatively better time as far as the loan growth is concerned. So certainly, I think market price have gone up, but I think the corrective price in the market whenever it is available should be a good buy opportunity to buy into IndusInd along with other corporate banks like Axis, ICICI, and of course HDFC.
Hi Deven, good morning. Since we talk about banks, what about Federal Bank? You know, they were talking about raising some money. They have done part of that via preference issue and they're also doing a QIP. So bulk of their fundraising plans will be done. How do you view the stock from here on? Last week, post its numbers, the stock did pull back a little bit because of a minor compression that we saw in NIMS. But they have indicated that going ahead, things still look up. Your view on it?
So I think while fundamentally nothing wrong with the bank and I say the prospects as well. But more importantly, I think I would prefer to stay with the bigger banks, the larger banks, for a simple reason that when economy is picking up, the growth rate is assumed, I think, to be on the higher side in the economy. Companies with a larger ability to lend and a book size would probably be more preferred because for them, the cost of fund would be lower. Cost of transaction also would be equally lower. And at the same time, I think the growth rate would be sustainable because of the higher amount of credit offtake which is happening due to the growth in the economy. So I would rather prefer to stay with the larger banks because I think for them, the raw material is money. And if this money is available to them, probably these banks are relatively better placed compared to the smaller banks who would have to struggle. Not that they will not be able to expand the credit, but they will have to struggle. Vis-a-vis, I think the larger banks would probably have a natural growth because of their borrowers are equally large at this point of time.
Deven, hi, good morning. Any thoughts on L&T Technology, which reported numbers? I mean, actually, LTIM, L&T Technology, Tata Elxsi, all these underwhelming numbers.
So, Prashant, good morning. Well, I think on one side, those numbers are slightly, I think, challenging at this point of time. But on the other side, I believe that I think these companies have relatively more amount of growth prospect to talk about. They are, each of these names that you have mentioned, each one of them have been operating into the niche areas, which I believe, I think, has given them the advantage of working closer with their customers. So in my viewpoint, even though the times are a little challenging, and maybe I think on a sequential basis and also on a YOY basis, in some cases the growth rate is being seen a little moderated. But in my viewpoint, I think that is not taking away the larger prospects that they have. Maybe 1 or 2 quarters, I think they may probably find themselves back into higher amount of order intake into the company. At the same time, I think the market needs to get adjusted for these companies largely because of the fact that valuations have been, I think, fairly priced in most of the mid-tier IT companies, including the names which we are discussing. I would believe that I think if the market corrects on the price and the time correction, probably I think these companies are relatively worth looking at once again back into the portfolio, given the opportunity size on which they are working at this point.
Okay. Deven, we have Reliance Industries earnings coming out on Friday, and this time around, the strength in the consumer business continues. However, within the OTC segment, I think the refining margins are expected to see a dip. So, sort of a mixed bag this time around. But the stock is up 30% from the lows we saw in the month of March. How are you placed here? Do you think there are any positive triggers that can take the stock higher?
Yes, Sonia. So I think 2 or 3 points from the consumer business point of view. Of course, I think Jio Financial is possibly running the clock at around 20% rate of growth, which is fundamentally very, very important. And this is not counting in the new Jio phone services that they have launched, which is Jio Bharat, they call it as. I believe that I think Jio Bharat in itself, I think would have the ability to produce revenue of about 25,000 crores in a year to 15 months time from now. And at the same time, around 12,500 crore worth of EBITDA out of this particular portfolio of activity. Given the existing business and which I think they are having the higher amount of ARPU targeted because of the larger data consumption at the same time, I would like to believe that I think Jio, the existing current business would probably clock in about 1,20,000 crore worth of turnover in financial year 23-24. And on that turnover, I think somewhere around 60,000 crore worth of EBITDA is, I think, distinctly possible. So overall, we are talking about around 65 to 72,000 worth of 72,000 crore worth of EBITDA in this current financial year, given the situation from Jio itself. And retail platform particularly is growing at the rate of around 15% rate of growth plus, and at the same time around 7.5% kind of EBITDA margin on the top of it. So assuming that I think they would be crossing 3,20,000 crore in the current financial year, as far as the top line is concerned, probably I think they are talking about 21 to 25,000 crore EBITDA from there as well. So you're right. I think the consumer-facing businesses are the ones which are driving this particular stock. And Jio Financial Services, which is getting demerged, I think it's recorded today. I would like to believe that I think that has a potential to give you the multi-bagger return going forward from the demerged entity. So certainly, I think Reliance, I think all the verticals are probably seen doing very extremely well as far as I think investors concerned. They will get appreciation, I believe.
Okay, all right. Deven, before we let you go, I wanted your view of on the blockbuster result that we got yesterday from Polycab. The last few quarters has just been surprising the street, and one would say we don't want to touch real estate stocks or some of these other stocks, but this could be an indirect play out there. And the stock has done very, very well. But at current reckoning, what's your view?
Well, I think undoubtedly the numbers are absolutely spectacular numbers, I think. And the wire and cable business particularly, where the company has recorded significantly large growth, almost double kind of a growth that they have reported, is something which is inspiring a lot of confidence because the possibility has always been high and they have started clocking these numbers. So from the perspective of looking at this company from investment, yes, I think one should stay invested. Of course, I think valuations are at this point of time only fully priced, as I believe, or maybe fairly priced, as one would like to call it as. FMEG business in particular has a lot of potential. But I think that is not reporting enough amount of contribution at this point of time. Maybe they are in the building phase to a greater extent. But I would like to believe that I think that business too, eventually I think should start contributing and the portfolio will ultimately become balanced with wire and cables business. So one could certainly look for an opportunity to buy the stock at a lower level if market gives correction at some point of time.
Okay. All right, Deven, thanks a lot for joining in. Appreciate your thoughts. Polycab has been one of the biggest gainers. It's doubled in the last 1 year. And of course, very good set of numbers as well. But let's